All right, team. Good morning. Good morning. We got the Fed Minutes report going live, 2 p.m. Eastern Standard Time in about 50 minutes. We will stream this entire thing live as we always do. I'll put some music up, and listen. What did I tell you guys this morning? I said we're gonna get choppy action today. We had this big upward pressure from the revision data. But aside from that, what have we been? We've been sideways flat. I'm not going to say I told you so, but, we definitely were correct. Sideways flat action. All right, so the Fed Minutes report is a detailed response, multiple page report on detailed report on the last Fed decision, which was a pause. Really interesting and important report this week because, there's the whole dynamic of like rate cuts in September and what that means. We're going to cut rates in September, most likely, at least at this point. And, this report might give us a little bit more insight into whether we do, whether we don't, what happens. You seen the SPY daily chart? Let's take a look. So here's the daily chart. It squeezed to 554, but not touch that today. What do you mean? Yeah, you're going to have to explain a little bit more, X. How are they going to cut rates with the dollar currently crashing? I mean, let's see if the dollar's actually crashing or not. Like, again, the dollar is one of the most sensationalized things. Like, the dollar's definitely down today, right? But if you put up a yearly chart, it kind of gets rid of some of this noise. Like, the dollar's been completely flat this year. It hasn't really gone anywhere, So, like, the dollar has done this basically all year. So you can literally draw a rectangle around it. It's such a flat year. And even we're at the bottom of the range in the dollar now. Like, we're just at the bottom of this range, like this area here. So, I mean, I don't know if we could really call this crashing. We're down, 5%. And in some regards, the Dixie usually just moves inversely to markets, right? So if the dollar index is moving down, markets go up. It also has to do with payroll data. Dollar's probably going down because of the revisions in payroll data that we got this morning at 10 a.m. I'm assuming that's why, like, the dollar is down like it is today. Just revisions and the payroll numbers that we got earlier. So, I mean, is it the end of the world? I wouldn't really call it that. I think if the dollar was flying up, again, crash and doomsday predictors like to go both sides with dollar. What it means, like the nuances of the dollar and the dollar index, the Dixie is what it's called. And so again, like 2021, 2022, the dollar index was going up a lot. And what did they say? They say, oh, it's big fears. It's the end of the world. The Dixie's spiking up. Inflation, guys, all these big inflation problems. Oh, no. Right? And then when the dollar starts to come back down, then they kind of play the other side. And they say, oh, the dollar index is crashing. What do we do? Right? Like, no matter what happens, they're going to say it's the end of the world. And you just want to be more resilient to that. We talked about that this morning. Like, you got to be a little bit more resilient, I think. We're definitely not breaking any major lows here. We're kind of flat on the last few years. If I put up a weekly chart, even like a monthly chart, here's a monthly chart, like the trend looks business as usual since 2005, right? Like, if we look at the real long-term trend of the dollar, like, it's going to increase over time generally, but I don't think that looks horrible. No? Maybe I'm wrong. We could look at like the Japanese yen. And the yen's pushing up. But when you look at broad markets like the S&P, the NASDAQ, NVIDIA, I wouldn't really say we look like we're in massive trouble today. I think today we have the Fed Minutes report, and then the day after tomorrow we have Jackson Hole, which is going to be probably the most relevant event of the week, because Powell might influence the perception of whether the Federal Reserve is going to cut rates or not, and that's a big, thing to pay attention to. That's what everybody should be watching. Well, gold's definitely strong. Gold's been breaking lifetime highs. So the FOMC Minutes report is not a rate decision, George. It's not a rate decision. It is a recap and reaction, really, to the last Fed meeting, which was, 3 weeks ago. So they're not going to cut rates today, I guess is the point. Yeah, we got unemployment report and PMI data tomorrow. Not the biggest report, though. I mean, unemployment week-to-week report's important, and I think we're watching it with a little bit more of like magnification because of the rate cut dynamic of markets right now. But I it's still a weekly report. Like I would rather it be important. We get a lot of people here when it's important, but still, I would take it with a grain of salt and understand. Like you really, the data you want to pay attention to is going to be the monthly unemployment percentage more so than the jobless claims weekly unemployment filings. But it's still somewhat relevant. They're expecting it to come in tomorrow at 230,000, 230K. Last time it was 227. So they are expecting an increase in unemployment filings week to week, which isn't necessarily good, of course, if you want more people working and spending and less recession fears. But it depends on what you want, whether you want rate cuts or not. Oh, yeah, 818,000 is the highest payroll revision in the last 15 years. Yeah. I don't know the euro, US dollar. I'm not sure what it's going to do. GBP, US dollar, I don't know. IRWD. Yeah, I mean, I don't know what this is, what it does. It's a pharmaceutical company. Yeah, I don't know. Downward trending over the last year, it looks like to me. Really, the last few years. It just doesn't look good, to be honest. Downtrending a lot. The problem with this, right? The problem with these is that, a lot of traders that, and I'm not saying this is you, right? But a lot of traders that don't have a big bankroll, they end up trying to find discounts, cheap value in penny stocks, right? But most penny stocks like this, most real blue chip companies are never penny stocks, right? People have this idea that all blue chip stocks started off as penny stocks and just kind of pulled it up from their bootstraps and turned it into blue chips. But most modern blue chip companies IPO and they're $20, $30, $40 a share, right? So they're never sub $10 stock, especially modern inflation times, right? Especially not now. If it's a genuinely good company, right? So the only companies that you really see that are downtrending at freaking 10, 9, 8, 7, 6, $5 a share are usually just not good companies, right? I'm not saying none of them end up the one in the most recent history is Carvana. Carvana got all the way down to freaking $3.50 a share, right? But this type of thing is rare, and usually this stems from big names that get weak and then regain strength more so than obscure names that nobody's ever heard of in stocks and businesses, so I don't know anything about the company IRWD. I would be very careful buying it. Most of the time, once these penny stocks start to downtrend, they might spike up sometimes and occasionally, but usually they're not going to come all the way back and start doing well as a company. Usually they're on their way out. The CEOs even know this a lot of the time, so they start kind of milking money from the company, and it's just not the move, I think. It's just not the move. Do what, smart money, big money, if you want to be smart money, you got to follow big money, right? And what big money doesn't do is they don't invest in penny stocks. They don't buy penny stocks. They don't hold penny stocks at least most people. It's this is generalizations. There's always outliers. Buy or sell what? I don't know. I don't know what the market's going to do. I see it trying to move, But choppy day. We'll trade a little bit. I don't mind trading some here today. I'm assuming we're just going to continue to get choppiness, right? Leading into all this stuff. I'm assuming choppiness is what we're going to get. So we got a couple hundred shares on our top step challenge here. Take a little bit off. We got a little bit of greed. I'll add some size back. See if we continue to flush. Take a little bit more off, just protect the trade. We're up about 1,000 on the day. We got a little bit of a cushion. I'm just range trading, to be honest, ahead of this report. I don't know what the market's gonna do or not do. We'll probably hold this one roughly break even if we can. I'll sell it. Cover. If we break over 100, we'll cut this quick. I'm going to cut it. So we still made a little bit on this trade. Not as much as we could have, but... yeah, we also got our actual funded account that we're a little more green on now. But yeah, there's Carvana gold. Where's gold at? Yeah, I'm looking at the Q. Love to catch back up. Tesla is still pretty green over 222s today, so it's still trying to move. Just patience, I think, is important. I want to see if the market pulls like a cup and handle. Oh crap, dude! I keep accidentally buying. Dude, I kind of just mismanaged a trade that I didn't want to mismanage. And I was actually correct about my initial direction here. I still have $800 today, basically, on this account, but a little disappointed I messed that up. I clicked buy accidentally. I didn't really want to click buy. But oh well. My advice is to stay flat during the Fed meeting. Are you profitable? Most of the time. I mean, again, I'm not claiming anything. My channel's called Beginner Trading. I'm not claiming to be an expert. I'm not even claiming to be a good trader. I don't sell a course. We mostly cover economics and stock market. We day trade, but we also swing trade, invest, you know. So... I mean, we're green on every account that we have today, mostly right now on both funded accounts. So, I mean, or both funded account programs, I should say. One of them's actually funded. The other one, we're just working at it. And we're up thousands on the year in stock trading. But, you know, again, I'm not claiming anything. I don't, you know, no guarantees. Definitely top 3. You swing trade gold? Not gold producers, no, not really. I usually, if I buy gold, it's either, it's usually like gold ETFs. Futures will expire quarterly. So if I invest in gold, it's usually like gold ETFs that track the future prices and stuff like that, right? Maybe sometimes miners, I guess, but. Will Fed cut in September? I believe so. I think they probably will. I love choppy days versus straight down or up. You can minimize losses, take profits. Yeah. So it was 818K. You can find it on the Bureau of Labor Statistics agency on the website. Just go to economic releases. Look for economic reports. You'll find it somewhere. Yeah, I'm looking at everything else here. See if we get it. Yeah, there's no live speech today. What is the FOMC meeting? So this is a recap of the last Fed meeting. We're going to use AI to interpret it like we always do and kind of give you an understanding of it. And we're going to watch the stock market reaction. We do it every 3 weeks, right? So this is the FOMC Minutes report. The FOMC Minutes report is a 12-page file, or roughly 12-page document that details why the Fed chose to remain, or why the Fed chose to do what they did the last Fed meeting. In this case, specifically, it'd be a pause in interest rates. Why they did that, what that state of the economy looks like, what the current state of the economy looks like, what they might be planning to do in the next meeting. All right, like that's why you look at the Fed Minutes report, and yeah, we're gonna cover it when it drops, like we always do. If they cut rates, is it good for market? I don't know, man. I'm against rate cuts personally. I'm against rate cuts personally. I think we should keep rates as high as we can for as long as we humanly can. Even if we go into a mini recession, I'm okay with that. I think inflation has gotten really, really bad, and it's not sustainable. Like the most frustrating thing is like for business owners, right? Like this inflation hurts business owners the most. How does it hurt them the most? Well, there's a lot of reasons it hurts people, right? The main one is that, say you're a business and you make $1 million a year, right? Well, after inflation, $1 million a year, I'm not saying it's not a lot, but it's certainly not as much as it was 3 years ago, 2 years ago, right? And so your standard of living decreases over time as a business owner. And same thing with consumers, right? Like you might make $100,000 a year at a job, and like 5-10 years ago, 100K is like a status symbol. Like, damn, you make 100K, great, right? Now 100K is not that much. Like almost everybody makes 100K at least now, depending on where you live, and so 100K is really not that much anymore. And I know some people might be hearing me say this and be kind of bummed out about it, and that's true. You should be bummed out about it, right? And in that regard, you should not want more inflation. And the way we stop inflation from growing to an unsustainable amount is by keeping a high interest rate environment. That's what we do. You keep a high interest rate environment, you discourage spending, you stop all these consumers from spending so much. Over time, it slows inflation down. And if we don't do that, and if we pander to real estate professionals and people involved with lending, which is really who you're pandering to when you cut rates, then you actually make inflation worse. If it spirals out of control, it can make it much worse. Now, a 25 basis point cut probably won't do that. It's not enough of a cut to really have some type of huge influence, although it could, I guess. The worst thing is if we continuously cut meeting to meeting 50, 75 basis points and try to bring interest rates down, and I don't think that's necessary. I think there's a lot of confirmation bias going on with lenders that are like, oh, we need low interest rates because they want them low because they do more business when they're low. Right, but it doesn't mean we should. It doesn't mean it's good for for consumers. Yeah, it's worse for consumers, and it ultimately, that's my stance on it. But I'm like a broken record. I say this all the time. Yeah, I mean, government spending is a problem, right? Like government spending. Another reason we had such massive inflation problems is the quantitative easing that we did in 2020 to try to save us from, deeper recessions, depressions that we got from the pandemic. The Fed printed a bunch of money. QE is creating bank reserves, like printing money through bank reserves and then using those bank reserves to buy financial assets like bonds, and injects liquidity into those markets and allows lenders to lower interest rates to consumers, banks, so forth, and that made it much worse too. some inflation is good, not 10, 11, 12% inflation. That's not sustainable, it's just not sustainable, and so some inflation is fine. It means the economy's good, right? But when we're talking about massive inflation spikes that we've seen in 5 years, if you really talk to average everyday consumers, right, a lot of them don't understand economics is the first thing. The second thing is that a lot of them are convinced that low rates are better for them, but low rates are going to make things worse. It's going to make inflation. If you talk to them right now and you ask them why they're unhappy, most of the time they're unhappy because prices have gone up so much in everything over the last 5 years, right? Like, that's genuinely why most of them are unhappy. And, keeping a low interest rate environment will just make that worse. It depends on how much, but in general, it'll make it worse. Yeah, let me put a timer up. All right, so here's the Fed minutes report. We got a timer. It comes out in about 30 minutes. Right. So MJM says I make $120K a year in my job and I'm making it okay, not great. Right. It's, prices going up is not good for anybody, Even the businesses, like, they're usually just trying to keep things stable by increasing prices, right? But it makes everything more expensive. It makes it harder to live. More people are living paycheck to paycheck that make over $100,000 a year than there ever have been, and that's a crazy thing when you think about it. Financial stability is a lot harder to find right now for a lot of people. Yeah, bonds are good. You got to hedge against that inflation somehow. You can buy bonds, gold, real estate, stock market, whatever you want to hedge against inflation. That's fine. But I'd rather just keep interest rates high for now, If cut the race, gold will rocket. Yeah, maybe. I mean, I don't know. That might be true. I don't know the correlations with gold. Yeah, so the price of gold typically increases when rates are cut. That's probably why gold's breaking up highs now, because gold's been ripping up, breaking highs over, gold just recently broke highs, I think yesterday. And so it's most likely because of more certainty in terms of whether we're going to cut rates in September. Gold also spikes on a lot of different reasons for a lot of different, there's a lot of correlations with spiking gold, and, geopolitical events can spike oil as well as cause people to panic and buy gold. Stock market crashes can cause people to panic and buy gold. Recessions, depressions can cause people to panic and buy gold. Yeah, there's just a lot of reasons, to be honest. Did the yield curve get worse, Clement, or better, right? Last time I looked at the yield curve, it was starting to go back to almost break even. So is it getting better or worse over the last week or two? I know the yen carry trade influenced it some. The SOM rule triggered, even though SOM said she didn't think we were heading towards a recession. And a lot of people like to reference the SOM rule, but then ignore what SOM herself said about it. And again, I don't know. I think what I respect out of most people is the ability to say, I don't know, right? There's a lot of egos floating around. Most of the time they're based around what those people want to happen, right? So if you're a lender, 2021, a lot of them thrived, did amazing. Nowadays, when interest rates are twice as much as they were in 2020, 2021, they're not thriving, right? And so they really want rates to go down. And so they think we're more likely headed towards an recession, and that in turn we should cut rates sooner, right? But really what they want is low interest rate environments so their businesses can do better. Same thing for me, right? I might want a high interest rate environment so that I can get better cash deals on properties, I don't want the stock market to crash because nobody should want the stock market to crash, I want to believe the economy's doing well, so maybe I have confirmation bias too. But again, one thing I respect is the ability to say, hey, I don't know, you may be right, I might be wrong. And I think that's important because a lot of egos float around the stock market. Yeah, so things evening out there, Ty, probably is why oil's dropping. Oil tends to spike with geopolitical conflicts and uncertainty. And if those things like even out a little bit, it'll correct back down some, Why do I love to see the crypto market crashing? I don't know. You might have missed out on the original Bitcoin run. And so now it makes you feel better if it goes lower in price. I know that's definitely true for a lot of people. Nvidia, kind of like Nvidia, they're mad Nvidia spiked. They didn't ride it up like everybody else, and they want it to crash in turn. SPY looks good though. SPY's getting close to lifetime highs. The lifetime high on the SPY is like 565. We tapped 562 today, so the S&P is getting close to lifetime highs, which is interesting. Yeah, I'm expecting a cut. It's pretty probable we're going to cut next month in September. Right, like it's pretty probable. It's not certainty, nothing is, but it's very unlikely that we don't cut, I would say. Unless like that type of outlook is going to change if we get big inflation spikes. So if inflation spikes from now to September, in ways we can gauge that, or like the PCE data drops at the end of this month, right? At the end of this month, we got GDP data, PCE data, both dropping, right? Those are two very important reports. If GDP is strong and inflation spikes, PCE spikes to whatever, 4 or 5%, which is pretty unlikely, but it could happen. Then that's a situation where the Fed would hopefully the Fed would look at that situation and be like, hey, we shouldn't cut rates, right? That's risky. We're going to make inflation worse. Like inflation spiking, it's risky. Let's not cut rates, right? Or if GDP data comes in much weaker, this is another outlook, or this is another possibility, right? If GDP data comes in really weak at the end of this month, and we're much closer to zero or negative than initially thought in the initial estimate GDP report we got not that long ago, that might signal a larger rate cut than we're expecting. Right now, the odds are a 25 basis point cut in September. But if GDP tanks, we might cut more, or if PCE spikes, a lot, then we might not cut at all, right? That outlook can certainly change. It's my opinion that we're almost certainly going to cut, though. I think it's not only is an election year, and regardless of whether anybody admits it, like he's going to have pressure to cut and stimulate the economy. Why? Because it's an election year. Politicians like to say, look at the thriving economy that I have right now. And again, I'm not here to argue politics. I'm pretty neutral about all of it. But universally, regardless of the side, politicians like to say, hey, look how great my economy is. And what makes the economy look great? Stimulating it through, rate cuts, easing, whatever you want to do. So I'm pretty sure we're going to cut next month, right? But nobody freaking knows. Maybe I'm wrong. It'd be outside of it would be pretty low probability, though, if we do. In my opinion, consumers not going to spend forever, get scared into holding cash. Companies are forecasting lower earnings in the future. Maybe this will lead to companies lowering prices, causing disinflation, which we already are seeing. Let's hope these price cuts won't lead to layoffs to cover lower earnings. We all know what happens when there's unemployment. This is why I'm buying a lot of long-term bonds, TLT, ETFs, 3 times leverage. Yeah, I know what TLT is. It's 20-year, mostly, right? I like looking at, TNX, which is 2-year. 2-year yields, I believe is what TNX is. Or 10-year yields, sorry. But yeah, I think we're going to cut. Again, I'm not even saying I disagree with you, Clement. I'm all for theorizing what happens. I'm not sure. You might be right. I just think, again, I'm under the stance of like real estate's up 60% plus in the last 5 years. Inflation has been up massively in the last 5 years. The market can handle a correction in the economy, right? The economic markets can handle a correction in price and home prices. We can handle many recessions right now. I think we almost need to. The only time where you'll see prices actually go down is if we enter recessions and depressions. And I'm not saying I want that to happen. I just want price stability. I want inflation to stabilize. I don't want another 5, 6, 7% inflation year and my prices to go up even more. And then people are going to be complaining about high prices, even though they were the same ones pushing for rate cuts. I'd rather I would rather us going to a recession and have inflation stability versus not going to a recession and inflation spikes up to 10% again. Anyways, Tesla at the top of the range. Tesla over 220s as well, which is interesting. Yeah, let me do a poll. Did I not do one? Yeah, you're right. All right, let me do one. 220s as well. What does the FOMC do in September? Is going to be the question for the poll. Considering we're talking about this, 25 basis point cut, 50 basis point cut, another pause, something else. All right. There you go. What will impact on gold? I don't know what gold's going to do. Again, we're going to use AI to interpret this. And so I genuinely have no idea what gold's going to do. We're going to use AI to look it up, figure out what they're saying in this report. We're going to watch the market reaction. Again, I really don't know what gold does. Yeah, 25 is pretty probable. I would say 25 basis point is like 90. I mean, we could look at the Fed watch tool, which is what a lot of economists use to gauge what the decision's going to be. And again, at this point, 25 basis points, about 65% likely, 35% likely for a 50 basis point. This is 50. This is 25. Right, so those are the probabilities. Well over 50% chance of 25 basis point cut. And that's fine. I'm okay with that. As long as it doesn't spark a longer term trend of aggressive rate cuts and low interest rate environments that will make inflation worse, I'm okay with it. I would say the larger the rate cut, the more fear it's going to spark in markets and the more negative momentum we're going to have for stocks as well. It's probably the case, right? We can only speculate, but. How to manage anxiety during trading? Scale down your size. If you're trading too large, you'll be more anxious. So if we are down in jobs, most likely a rate cut would happen. Yeah, so the Fed has multiple different sides. The Fed has two mentalities that they can have. On one side is stimulate the economy. On the other side is discourage the economy, I'll call it. Push down the economy, right? We'll call it restrictive. I'm gonna restate this, right? So we'll call it one side loose and one side restrictive, right? Now this all has to do with interest rates, okay? And so if we see economic weakness, right? Like an example of this is like low job numbers, losing GDP, right? Like the definition of a recession is 2 losing GDP quarters. And so economic weakness, low jobs, losing GDP, other signs of recessions and depressions, then the Fed will bring interest rates down, or they'll print money through QE and other stuff like that, and they will try to stimulate the economy, right? That's a loose monetary policy, right? In which they're trying to bring interest rates down, because when interest rates are low, consumers spend more, right? You got easier access to money, cheaper access to money through low interest rates, and in turn, people generally spend more. If you're spending less money on a mortgage, you'll spend more. There's a lot of reasons. The other side is a restrictive stance, right? That's trying to maintain high interest rates. Why? Because inflation's a problem. So we maintain a restrictive monetary policy. Hawkish is what they call it. Whenever we're trying to kind of push inflation down, really discourage the economy is what they're trying to do. They're trying to make interest rates high, take away that easy access to money. They'll also do kind of the reverse to quantitative easing, money printing, and they'll do what's called quantitative tightening, which means that they just kind of with QE, they're injecting liquidity into those markets and letting banks lower rates. With QT, they are letting their current holdings mature and run off, and so they're taking away liquidity from markets. And in that regard, it forces banks to keep high interest rates. And so again, one's restrictive, one's loose. If inflation's really bad and really a problem in short, history, then they'll be restrictive. If recession risks are there and we're at risk for recessions, depressions, like rising unemployment, all that stuff, then they'll take a loose monetary policy stance. Right now, you might think that we're in recession risk territory. And again, this is what's up in the air. This is what a lot of people are arguing about right now. And I'm not really saying either one of them's right or wrong. I could be wrong. I don't think I'm wrong, but who knows? I don't think we see enough signs of a recession or depression yet to pivot to rate cuts and lower interest rates to consumers, right? I don't think it's the time yet. I think we got to get inflation really under control first, even if that means we risk some economic weakness that people don't want, right? I think people are going to be a lot more unhappy if inflation spikes. But again, it's subjective. Everybody's different. Yeah, I don't think taxing unrealized gains is ever practical. It's going to open up so much manipulation in markets that it's just not going to be worth it. People are going to be finding all these ways to show negative balances that they can write off that are unrealized, right? Because if you tax unrealized gains, you got to let people write off unrealized losses, and it just doesn't make sense. I don't think it'll ever happen. But again, outside of that, I don't really pick sides politically. So 25 basis point should be, I think that's more neutral, Sean. I think like a 25 basis cut is what's expected, right? So that's kind of like a neutral outcome. I think if it's higher than that, it might scare the markets. If we don't cut at all, people might fear inflation, and so they'll react appropriately to that, whatever you think that type of reaction would be. Yeah, tomorrow we have the jobless claims unemployment filings massive report. Nvidia ripping for now, is it really? Yeah, so Nvidia all the way up to almost 130. Didn't quite break it this morning, but had some good leverage last week. I'm usually bullish myself, so neutral is bullish for me, but I think I got it. 50 would be panic mode, otherwise okay as expected. Yeah, I mean, it's never easy to predict what the reaction to Fed decisions are going to be. But if we do like a 50 or 75 cut, it's probably going to make the market panic, right? We don't know for sure. We can only speculate on what the reaction is, but in general, I would assume the market panics. I think that's really an overreaction by the Fed if they cut 50 or 75. But who knows? Again, nobody knows. All job numbers will beat now. They changed. Yeah, maybe. I'm going to cover the FOMC Minutes report live. I'll send you guys the link as soon as it comes out, as well as cover it live and use AI to break it down in a more easy to digest way is what I'm going to do. Also, guys, if you haven't already, check out TopStep. TopStep funded account program and futures. I was trading on both of them today. This is an actual funded account. I'm up 122. The other one I was trading on TopStep X, which I'm really starting to learn and like. I'm up about 660 today. I lost a little bit earlier, but that's all right. But again, this is a funded account program in futures. They give you a demo. They test your skill with a demo. If you pass the test, they fund you. If you fail, you only lose the monthly subscription cost. So it's a way to limit your risk when you're learning how to day trade. And if you want to get started for a much smaller amount of money than most new traders do, most traders lose thousands of dollars at the beginning. It allows you to do that. The base one's only $49 if you use my link. They're going to give you a 50K demo if you can make 3K in profit without losing 2K, so it's reasonable 2 to 3 ratio. They fund you 50K, 90% split. They've paid out tens of millions of dollars to their traders. They fund thousands of traders. They have some of the best funding rules in the game. Once you're funded, some of the best rules to stay funded, and ultimately just a great, reliable funded account program. If you want to check it out, I'll put the link up. They are an affiliate of mine, so they pay me money, and I'm biased for sure in their favor because of that. But again, it's just a good way to learn. Instead of risking thousands, you can try this. If you lose, you're out $50. It's much cheaper than risking thousands, but if you pass it, you get 50K funding. They also have 150K, 100K. You can check them out right here. And in the futures market, you can day trade the S&P, the NASDAQ, gold, some currencies. So most traders that are day trading should be trading them unless you really want to trade individual stocks. You can't trade individual stocks, only futures like S&P, NASDAQ, index funds and stuff. But the patterns are very similar anyway. But check it out. Here's the link. Appreciate the love. Again, we'll see what happens. We're just kind of sitting tight waiting. Well, this one has rate cut implications, Dream. So this one is important because people are really hyper-focusing on rate decisions right now because of the dynamic of a pivot by the Fed to cut rates, right? Everybody's worried that everybody's speculating on how rate cuts will affect the market and the economy. And so, like I said, really polarizing issue right now, I think. And then Friday we got Jackson Hole Symposium, which is bigger than any of this stuff, right? Powell speaking at Jackson Hole, big economic conference, is massive report. So the link doesn't work, does it not? Let me try it. Yeah, the link works. I clicked on it and brought me right here. So yeah, it works. Do you guys think Tesla's gonna stay bullish? I have no idea. Yeah, we got 7 minutes, guys. 7 minutes. We got almost 1,200 people here live. 7 minutes left. Also, I'm going to throw this in sub-only mode, so if you haven't already, hit the subscribe button, hit the notification bell. I appreciate it. Is money or knowledge more important? I mean, I don't think they have to compete with each other. I think both of them are important. Like having money, having a big bankroll is important. Just like if you play blackjack and card count, right? Like the people who have, like, they say you should have at least 100 buy-ins if you're going to card count at the casino because variance is high, right? So in that regard, having a big bankroll in trading is important because variance is high, right? Still, in the beginning, you probably shouldn't be trading large no matter what because you're probably just going to lose whatever account you put up in the beginning. If you put up 5K, you're probably going to lose 5K. You put up 10K, you're probably going to lose 5K. If you try to follow the PDT rule and put up 25K as your first account, you're going to lose a lot of that most likely. It just doesn't make any sense. Yeah, they're not making any rate decisions. Well, I guess it depends on what country you're located in, Supersonic. Depends on the knowledge. Yeah, I mean, just because something is expensive doesn't make it worth it. You got a lot of mentors, gurus that sell courses on publicly available content for 5K, right? And some people, like a lot of people get really... I'm not going to say they're gullible, but they look at some of these guys like they're celebrities And so they look up to them and they think that they're offering some super value for 5K, and really, like, you could probably find whatever's in that course available for free on the internet for $20, maybe less. You probably find it for free. You could probably find that course for free somewhere, really. But you know, yeah. Some people get wrapped up in it and buy it anyway. It doesn't mean it's worth it, though. A lot of time, confirmation bias wants people to believe it's worth it. You know, you spend 5K on something, you're going to be like, man, this is the greatest thing ever, even if it's total nonsense, right? You're going to try to convince yourself it's great. So, anyways, here we go. We got the Fed Minutes report. We are on the website. We are going to get you this report live. We're going to have AI interpret it. All right, so we are ready. We're on standby waiting for the report. How do you rate trading levels? I mean, subjective. I think a lot of people want to be experts in trading, but they're not, you know. I'm not even claiming to be an expert myself. I just think there's a lot of ego that floats around. No, I don't think so, super. I appreciate it, Austin. You buying the Cybertruck? Nah, man. Thoughts on the SPY today? I don't know. Yeah, this is the Minutes report. What's up, Walking? Considering the prerequisites might be a pause. Yeah, they're not going to make any rate decision today. It's just the Fed minute. It's a report that drops today. It's a reaction to the last Fed meeting is what it is. Yeah, once the report comes out, I'll give you guys a link. How come you don't have any recent videos on your channel? Because I'm mostly a live streaming channel, right? Go to live and you'll see most of the content that we put out, right? Like right now we average yeah, like our live streams are what is really my channel's known for. Not really my videos. Videos, I just hate editing, to be honest. Like if you look at here, we got a minute and a half, guys. A minute and a half. But an example of this is like, look. Like CPI, we got 30,000 views. You know, PPI, we got 10. Jobless claims, we got 10. You know, keep scrolling back. Apple earnings, we got 10. Payroll data, we got 12,000. Meta earnings, we got 12. FOMC meeting, we got 22. So most of my content's live streams over videos. It's just not video content. It's live. It's kind of like a TV channel almost, or a podcast in a way. Anyways, here we go, guys. We got almost 2,000 people watching live. It's not leaked. Get out of here, bro. All right, less than a minute. I appreciate it, B. Thanks, man. We already got an SUV and a truck and a car. I'm probably not buying a car anytime soon, to be honest. I got too many vehicles right now. We got 30 seconds. I don't have enough room. Yeah, the timer's a little bit late, actually. So it's pretty close. Yeah, it's a little bit late. I'm just gonna put this out the way. All right, guys, y'all ready? All right, 10 seconds. Yeah. All right, here we go. Here's the report live now. Let's see what the market does. I'll give you guys the link, but I'm also going to use AI to interpret it. The FOMC Minutes report should be right here. Waiting for it to release. It'll be on the right side. Waiting. It'll be right here when it comes out. There's sometimes just a little late delaying it. Alright, give me a second. We gotta just wait for it to come out. I'll get the report. It's pretty easy. Alright, so I think it's... Let's see. Alright, there it is. Alright, so it's out. Here's the page. I'll give you guys the link to the page, but I'm also gonna have AI break it down for you. Here's the actual report. Let me make sure this is the right one before I start getting AI. Weird, that link doesn't work. That link's broken. Okay, so here's the minutes report. I have to do it in a FOMC file, which is all good. I'll break it down for you. Alright, so... Okay. Yeah, so again, I'm going to have AI interpret all of this. The market's actually up from some of this report. All right, so this is going to be a lot. Yeah. All right, so this is the report. So the first section is titled Developments in Markets and Open Market Operations. And again, I'm going to give you summaries of this whole report. The market's moving up so far on this, right? But we're going to give you summaries. It says financial markets experienced easing conditions with lower long-term interest rates and higher equity prices. Treasury yields declined, particularly for shorter-term bonds, resulting in a steepened yield curve. Inflation expectations slightly decreased, and market participants anticipated a rate cut in September, with further cuts likely by the year end. In equity markets, small and medium-sized firms saw gains, while larger firms, especially in tech, underperformed. Global rate expectations also shifted downward, and the Fed's operational tools continue to maintain stable financial conditions. All right, so that's the first section titled Developments in Financial Markets. In terms of staff review of the economic situation, the U.S. economy grew solidly in early 2024, but at a slower pace compared to late 23. The labor market softened, slower job gains and rising unemployment. Though it remained low overall, inflation moderated but stayed somewhat elevated, with PCE inflation at 2.5% in June. Economic growth was led by private domestic final purchases, while net exports negatively impacted GDP. Global growth was subdued, particularly in China due to ongoing challenges, and inflation developments varied across advanced and emerging economies. To look at the staff review of the financial situation, market expectations for the Federal Reserve federal funds rate shifted downward, while Treasury yields declining, especially at shorter horizons. Broad stock indexes rose slightly, and credit markets remained stable, while accessible financing for larger corporations. However, smaller firms faced tighter credit conditions. Credit quality was solid generally, but risks persisted in sectors like commercial real estate, where delinquencies went up. The financial system's vulnerabilities were noted, with concerns about asset valuation pressures, high leverage in non-bank sectors, and potential funding risks. So to look at the staff economic outlook. So this is the staff's outlook of the economy. This is a really important section. It says the economic forecast for the second half of 24 was revised down due to weaker labor markets and indicators of that, predicting lower resource utilization. GDP growth was expected to align with potential in 25 and 26, while the unemployment rate would stabilize. Inflation projected to decline further, reaching 2% by 2026 is what they're thinking. The outlook carried downside risks to real activity and upside risks to inflation, though the latter was seen as diminished compared to the previous meeting. So basically, inflation risks got better, is what they're saying, right? So the next section is titled The Participants' Views on Current Conditions and Economic Outlook. And again, the market mostly reacted positively to the Fed Minute report. It says, quote, participants noted that inflation had eased. Hold on, let me make sure we are in. Okay, good. Yeah, we're in sub-only mode. Again, it says participants noted that inflation had eased but remained above target. Broad-based disinflation across core inflation components was there, and labor markets conditions showed signs of rebalancing, with moderate wage growth and easing gains in jobs. Real GDP growth was solid, driven by consumer spending and business investments, though some sectors faced strains for sure. Participants discussed risks, including potential inflation persistence and financial vulnerabilities. While the economy showed resilience, participants emphasized the need for continued monitoring and cautious policy adjustments. And so, yeah, and for those goals, they decided to pause the federal funds rate. The reason they paused last meeting was noting recent progress toward 2% inflation objectives, right? So that is basically cliff notes of this entire thing, right? That's cliff notes of the entire Fed minutes report. And it looks like the Fed minutes report is now causing somewhat of a bearish reaction. So also to clarify, the vast majority of participants at the Fed's July 30th and 31st meeting said it would be likely appropriate to ease policy at next meeting if data continued to come in as expected. As I said earlier, right? I basically gave you guys a little bit of a prelim, example of this, right? What did I say earlier? I said that the Fed was almost certain to cut rates next month unless we saw a couple things, right? The first one is really massive inflation spikes. Inflation spiking up at a much greater rate than expected will cause the Fed to readjust or to reconsider cutting rates in September. They're not going to cut rates if inflation gets massively worse, right? Like, that's understandable, I think, because cutting rates can make inflation worse. So if inflation's a major problem, they're not going to cut. Still, inflation has been seen as pretty good. It's not great, but it's better. It's an election year. They're facing pressure, and we have seen unemployment spikes, and especially with this revision, I'm 95% sure they're going to cut rates next month. Although, again, anything could happen. I might be wildly wrong about this. What do you guys think? Let me look at our poll numbers here as well. But, other thing is that participants warned that delaying easing could weaken the economy. Moving too soon risks inflation reversal. They also noted progress towards 2% inflation target, economic growth outlook downgraded due to weaker labor market. So we covered all this already. Right, so we'll put that up on screen. But yeah, we basically gave you guys a full breakdown. This is why I love AI, is because I can break it all down very quickly. That's a 12-page document that AI just gave me. I could break it down in like 5 minutes. So very useful, incredibly useful. Yeah, there's no actual speech, guys. This is a report. This is a reaction to the last Fed meeting, right? This is a reaction to the last Fed meeting. Here, I got you guys. I'll send you the actual report. Let me hope they got it fixed here. Last time they didn't, but hold on. Again, if you're on the FOMC page, I'm going to put this calendar up. If you want to read the full report yourself, I just broke it down. But if you want to read the full report, I'll show you how. Okay, here's the FOMC page. You go to the FOMC FederalReserve.gov, go to FOMC calendar, and then you scroll down. This is how you find the Fed meetings as well, right? The Fed meeting will be here. The statement will be here. The press conference will be here. And then every 6 weeks, you're going to have the minutes report. It comes out 3 weeks after the Fed meeting. So Fed meeting came out there 3 weeks ago. The minutes report is, if you want PDF file, it's right there. If you want HTML, like go to a different web page, you can go to that one. Right? But again, this is not an actual Fed meeting. This is a minutes report. Break it down. It's a reaction to the last Fed meeting is what this is. I've said that probably 5-6 times today, and that's all right. I appreciate the donation. I don't know how much that is, but thanks so much, bro. I appreciate it. Could Powell say something different on Friday? He could. Again, something about Jerome Powell, guys, is that Jerome Powell is a very balanced mindset person, right? He's going to be balanced. He doesn't, if you think about again, somebody asked me before, how many times have I gotten CPI exactly right? I've probably got it, I would say 6 out of 8. 6 out of the last 8 CPI reports, I've gotten CPI exactly right. People have asked me what I thought it would come in prior to it reporting, and I've gotten exactly right. The way I'm able to do that is balance, right? And what does that mean about the numbers? Maybe it means the numbers are, changed to what they want them to be. I don't freaking know. But balance works with CPI. It also works with Jerome Powell, right? Powell does not want to crash under his watch. He does not want polarity under his watch. He doesn't want volatility. Like, he's going to be balanced. And so what he's going to always say is he's going to do data-dependent decisions, right? He's going to go with data-dependent decisions. He's going to wait for the data to come out before he makes a drastic decision. He's not going to gamble the U.S. economy on something really risky. That's why I think if we have a 75 basis point cut, it's going to freak people out, right? It's not the most balanced thing. It's an overreaction, in my opinion. So I think we're probably going to do 25. Unless we get inflation spikes, then it's different, then it's different. Basically, this report didn't do anything and markets are pumping due to emotions. Maybe. You know. Can you summarize how to use AI to summarize the minutes? I think you could probably use AI to summarize how to use AI to summarize the minutes. You know. No, just go to AI and be like, yo, summarize this report. Paste it onto there. You know, it'll give you a summary. I appreciate you becoming a member. All right, guys. Do you guys want... Look, I can go through the summary again. It's not that long. All right, so developments in open markets. Financial markets experienced easing conditions, lower long-term interest rates, higher equity prices. Treasury yields went down, particularly in shorter-term bonds, resulting in steepened yield curve. Inflation expectations went down. Market participants now think a rate cut is pretty probable in September, with further cuts likely by the end of the year. That's the first part. Staff review of the current economic situation. They thought the U.S. economy grew in early 24 at a great pace, at a slower pace compared to 2023, though. Labor market softened, slower job gains, rising unemployment. It still remained low overall relative to averages. Inflation went down a little bit and moderated, but stayed somewhat elevated relative to normal. And PCE inflation at 2.5% in June. Economic growth was led by private domestic final purchases, while net exports negatively impacted GDP. Global growth subdued, particularly in China, due to ongoing challenges and inflation developments varied across different markets. In terms of the staff review of the financial situation, market expectations for the Fed shifted downward. Treasury yields went down, especially at shorter horizons. Broad stock indexes rose slightly. Credit markets remained stable with accessible financing for larger corporations. Although smaller firms faced tighter credit conditions, credit quality was generally good. Risk persisted in sectors like commercial real estate, where delinquencies went up. The finance system's vulnerabilities were noted, with concerns about asset valuation pressures, high leverage, and non-banks, and potential funding risks. In terms of outlook from the Fed, right, they said the economic forecast for the second half of this year was revised down due to weak labor market indicators, predicting lower resource utilization. GDP growth was expected to align. It was expected to align with potential in 25 and 26, while the unemployment rate would stabilize. Inflation was projected to go down further, reaching 2% by 2026. How the participants felt on current conditions of the economy. They noted that inflation eased but remained above target. Broad-based disinflation across core inflation components. Labor market conditions showed signs of rebalancing, with moderate wage growth and easing job gains. Real GDP growth was solid, driven by mostly consumer spending and business investments, though some sectors did, face strains. Participants discussed risks, including potential inflation persistence and financial vulnerabilities. While the economy showed resilience, participants emphasized the need for continuous monitoring and cautious policy adjustments. And then the last section is just their policy actions, which was a pause to the federal funds rate, short-term interest rates by the Fed. And that's it. That's the report. Market went up a little bit, came down a little bit, mostly flat. I think the market's probably going to move sideways. I said this early this morning. Market's probably going to go sideways because of jobless claims tomorrow, PMI data tomorrow. Friday, we got Jackson Hole and Jerome Powell speech. A lot of stuff going on. The big one's Friday, though. Yeah, we'll see. Buy everything. Yeah, I mean, do what you want. All right. Yeah, and again, if you want to check out Top Step, sponsor of mine, affiliate of mine, they pay me money. I'm biased as always, but it's a great way to learn how to day trade with limited risk. If you pass it, you get between 50K to 150K in funding with, again, a 90% split. If you fail it, you lose $50. It's not the end of the world. It really genuinely is a pretty good way to learn how to trade. Instead of risking thousands. Again, when I got started, I lost $3,000 in the beginning. My wife was like, John, don't do it. $3,000 was a lot of money to me. Young pup John wanted to day trade after seeing The Big Short and thought I was about to be some guru trading savant. I ended up losing thousands of dollars in a few weeks and almost cried. My wife was right the whole time and said, John, don't do it. And then she was right. I should have done it. But if I would have had something like this in the beginning, I probably would have tried it a couple times and lost and then gave up. Honestly, it's probably for the best, because then I would have never created this YouTube channel that's very profitable for me. But, so in the end it worked out. But, for most people, you're just going to lose thousands of dollars and be frustrated. And so instead of that, try a funded account program. You still have some pressure to succeed. If you lose, you only lose the monthly subscription instead of funding an account worth thousands and losing that. But if you pass it, you get 50K in funding. The split's 90% split once you're funded, so it's similar to putting the money up yourself. I just think it makes a lot of sense. But again, I'm biased. They pay me money, so I'm definitely biased in their favor. If you want to check it out, here's the link. Honestly, Top Step's dope. They're great. Check them out. Honestly, I'm becoming too reliant on AI. I use AI for freaking everything. Somebody says, hey, John, is the sun out today? Instead of going look out the window, I'm asking AI, hey, AI, is the sun out today where I live? And it's usually pretty accurate, but it can have flaws, too, with AI interpretation. Yeah. This is my first live. Hey, thank you. I appreciate it, man. Welcome, dude. Yeah, I've been on Top Step TV a couple times. Yeah. I'm using GPT 4.0 is what I'm using. What's your... I think gold is spiking up right now, getting close to lifetime highs. So if you want to know the immediate impacts of the Fed Minutes report, gold is spiking up. Nvidia is spiking up. The SPY is spiking up. The dollar index, the US dollar, is dumping down. The Japanese yen is spiking up as well, right? So, yeah. That's what's going on here. SPY is moving up. Gold is moving up. The yen is spiking. The dollar index is falling. Oil is dumping down, probably because of a little bit of easing pressure and geopolitical conflicts. Is probably why oil is coming down a little bit, I think. So the jobless claims unemployment filings drops at 8:30 Eastern Standard Time tomorrow morning, right? And we will be streaming the entire thing live like we always do. So jobless claims unemployment filings is tomorrow at 8:30. We will drop it live. We have thousands of people here usually for economic reports, because we cover it very fast. And so subscribe if you haven't yet. We appreciate the love. Thanks so much. And let's keep the growth up. Fed Minutes is already out. We've been breaking it down for the last 20 minutes almost. Again, if you want a detailed report, like here, if you really want to go look at it outside of me here, here's the, let's see if they fixed it. Okay, it looks like they fixed the link. Here's the actual link to the Fed Minutes report. Again, it's a 12-page document. It's a lot. But again, we broke it down already. So I use 4.0, which has no word limit. I'm assuming, John, but I'm not 100%. It did. I was able to copy the entire text of the FOMC Minutes report and paste it into GPT. So. Hey, thanks, Sam. Appreciate it, brother. Yeah, we're getting close to 150K. Listen, we got how many people here? We got almost 2,000 people here still. I know a lot of you guys haven't subscribed. Listen, let me pitch you guys real quick. Listen, I would never, ever pressure you guys to subscribe, but do it now. I'll hate you forever if you don't subscribe right now. We cover everything for free. We don't sell a course. I don't sell a service. I don't even claim to be a good trader. In fact, I'm mostly self-deprecating. I'm mostly saying I'm the top 3 worst trader of all time ever in the world. I do trade off stream. You're not going to see all my trades, but I'm honest about it. All right. I cover all this data very quickly relative to everybody else. We summarize everything. If you want to know whether something's going on in the market, you can check John out at Beginner Trading. I'm probably talking about it. And so subscribe now. Do it now. Again, or I'll hate you forever. Appreciate the love, guys. I'm going to get out of here. Have a great day. Again, markets are mostly flat. I think we're going to have choppy behavior. It really is, Jake. I use ChatGPT all day. It really is incredibly useful. Like a lot of people don't understand. I could query anything on GPT. I could say, yo, the labor revision data is late. What's going on? They'll say, oh, they revised it to this time. Say, okay, cool. Right? Like it's literally like having a personal assistant that I don't have to pay outside of the $20 a month I pay for GPT-4. Yeah, subscribe. I appreciate the love. Yeah. Where's Sarah McLachlan out? Get the arms of the angels in here. Subscribe. Yeah, I'm going to get a cup out, put some sad pictures of dogs up or something. Anyways, y'all be good. I love you all. Y'all have a great day. Remember, I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. Understand CFTC 4.41, hypothetical or simulated performance have limitations. I do trade off stream. I have no idea what I'm talking about. I might be wildly wrong about everything I say. Don't sue me, guys. That's all I'm saying. I love you all. You have a great day. We'll be back tomorrow bright and early. Y'all have a good one.